Bitcoin and gold.
First of all, I want to thank you both because this is kind of a historic first here at StockCharts, at least on Market Watchers Live. So we're going to talk a little bit here about gold and Bitcoin. And Dave has volunteered / been coerced to join us here and talk a little bit about Bitcoin. So I think what I'm going to do first is I am going to start with you, Dave, and I want to talk a little Bitcoin. This is something that admittedly I don't have a whole lot of experience with. I've never traded Bitcoin. And so I am going to sit back and hopefully learn some things as you go through and talk a little bit about Bitcoin. But it's a lot different than the things that we normally trade. I mean, if you're buying real estate, you have property. If you're buying the dollar, you can physically hold it in your hand. If you're getting gold, you can get the bullion. There's so many things that when you invest, you have something to hold. With Bitcoin, I don't know. What do you think here? Is it worth it? I mean, would you buy it?
So that's the real question. And I think the way that you responded to it, I think it mirrors what a lot of other investors, traders sort of experience. It's totally new. It's uncharted territory with most asset classes, with equities, with, even the dollar, with currencies, with interest rates. You have real experience over your lifetimes with these different assets and you understand them. Bitcoin is just new and it's trading like a new asset. It's understood like a new asset, which means it's relatively not understood. And so I think that's where there's opportunity, to be honest with you, for someone who watches the charts. I think that's where the opportunity is because there's so little data, so little experience most people have. So it is a right battleground for technical analysis to be understanding what's driving these short-term movements in the price of Bitcoin, to be honest with you.
Yeah, I think I'd almost say it's somewhat akin to, say, cheerleaders. I mean, you basically have your fanatics, right? I mean, those who really support it, believe it's going to the moon, and then others that sit back and say, where this thing can't go any higher, it's got no value. So what do you do? How do you mirror that?
So in your intro, when you were talking about gold, it was fantastic. You basically shared that, you said, I'm a bear on gold, but I respect the short-term movements. And I think it's a very polarizing thing, both Bitcoin and gold. It's one ways that they're similar, right? I've never met someone who's kind of wishy-washy on gold. You're either a gold bull or a gold bear, or if you don't explicitly say that, that's how you tend to approach it. And I think with Bitcoin, it's the same thing. People either think it's going to go to 1 million or people think it's going to go to 0. And there's very little in between that thinks it's kind of an okay asset. So the fact that there are fierce advocates, cheerleaders that swear by the long-term strength of those assets, I think is one of the things that makes gold and Bitcoin so similar and so compelling. It's such a polarizing asset. And for every person that thinks it's going to go to the moon, there's someone who thinks it's going to expire worthless at some point in the future.
Yeah. Now, one of the things I think that maybe is, could be construed as a positive for Bitcoin is that it really doesn't involve any of the central banks. And so maybe those who don't trust those central bankers, view this as a separate currency that won't be manipulated. What do you think about that?
I think that's exactly right. And just how we talk about a flight to safety and people going to fixed income instruments or real estate or something like that, same sort of thing. People that mistrust the ability of central banks to, manage their currency differential and, the whole idea of a fiat currency, which is the fact that currencies are free floating against one another. If people don't trust the ability, and there's a lot of skepticism that has grown over the years, especially with younger investors, trusting the system and trusting the stability of it. Something like gold or Bitcoin, if you're buying that, it's really a vote against the ability of central banks to operate effectively, operate efficiently, and do what's right for the overall global economy. And Bitcoin and gold basically is a vote that there are other ways, there are other sources of value, stores of value that make a lot of sense. So I think that's really important to remember that it is seen as an alternative to something like the dollar, something like the euro, something like Bitcoin. It's an alternative form of currency, of exchanging value.
Yeah, it makes sense. One final point. We're going to get in and look at some charts because I want to get your thoughts on what you think of Bitcoin. But one more comment, and that is, when I look at just about anything in the market, I'm always looking for correlations. I'm looking for, okay, this went up because this went down. This went up because this went up. With Bitcoin, are you aware of anything that correlates with the price of Bitcoin?
So it's a really good question. And to be honest with you, very little. I think what's so interesting about Bitcoin is that, as a technical analyst, as a behavioral finance aficionado, and those who, for the listeners who are clearly interested in charts, Bitcoin represents a petri dish of behavioral biases, because there's no real source of value besides what people think about the opportunity or the negative opportunity for Bitcoin. So as a result, it ends up being much more volatile. It represents swings in euphoria and negative outlooks that are based on just people's expectations. And as a result, it has a very low correlation to other assets. If you look at the correlation of Bitcoin to the dollar, it sort of hovers around zero, but fluctuates positive and negative, but never really gets to a statistically significant level. It's sort of uncorrelated. And so as a result, I think that's one of the things that is a potential benefit of Bitcoin, and also arguably for gold, is that, it's a little less connected, little uncorrelated return profile versus other assets. It's funny when you look at the chart of Bitcoin, and again, for those of us that, and again, the viewers that are used to looking at Tom and Erin, your charts that are fantastic and represent this great market history, the chart of Bitcoin doesn't really look like anything else. And I think that's what's so interesting, what's so compelling about it. Here we're looking at the last 2 years of Bitcoin. And if you look at this profile of this spike into year end of 2018, this big sell-off, the rally, and sort of all the movement in between. Other things look kind of similar to like that in different periods, but it has a very unique return profile versus other assets. The only thing that I would correlate this to, and it gets to how you actually look at the price of Bitcoin. I'm often asked how do you really understand Bitcoin and where it's come from? And I think there's two main ways you can do it easily on StockCharts. One is looking at the Bitcoin index. That's the chart we're looking at here, and it's $NYXBT. This is an NYSE Bitcoin index. It only updates at the end of every day, but it'll show you the long-term history, which is really only going back, 3, 4, 5 years, or to be honest with you. But looking at the last 2 years, you can really understand how this has fluctuated from a period of accumulation, sort of a bullish phase, to a period of distribution, more of a bearish profile, to return to a more of an accumulation phase. And the way that I would classify those phases are looking at the RSI indicator, which is that next panel down. So you can see as Bitcoin prices really extrapolated, went higher so quickly at the end of 2017, you can see how the RSI remained in that bullish category, never really getting below 40, really getting above 70 consistently. That's what happens when a market's in an extended bullish period. You can see how that totally changed in calendar year 2018, when the entire RSI goes lower, and you see the RSI being consistently oversold, very rarely gets above 60. It did it one time over the summer, but then reversed very quickly to go to new lows. And as a result, the returns relative to the S&P were dramatically exaggerated. So you had a period of outperformance going up, 300, 400, 500%. This is when the price of Bitcoin went up, 10,000, 15,000 en route to 20,000. And then as it sold off, and as stocks held up much better, you can see that the relative returns were dramatically lower. So this is one way you can look at it, is looking at the history of the NYXBT. The other thing you can look at is GBTC, which is a trust that tracks pretty closely the returns of Bitcoin. And here I'm showing the correlation of the Bitcoin closing price to the closing price of that GBTC, the Bitcoin trust. And you can see that overall it hovers pretty strongly positively correlated. There are times when that correlation becomes disconnected, and that's just when the movement in Bitcoin is so severe that it disconnects the two of them from one another. But you can see it catches right back up. And overall, it's a good lever to pull if you want exposure to Bitcoin prices. But that's sort of where I would look at the long-term profile.
Great comments. Actually, if you can bring that chart back down, show that. I want to see where Bitcoin's been rising here in 2019. I want to ask Erin, looking at this chart, Erin, you and I, we've talked a lot about bubbles on Market Watchers Live. And so when you look at, it's always easy to call a bubble after the fact. We saw what happened in 2017, the huge move up in Bitcoin, and then throughout 2018 just collapsed. Do you look at 2019, Erin, and do you see anything similar at this point to what we saw in 2017? Do you think this is a bubble, or
Well, honestly, I think you can recognize them when you're in because that's when the excitement and everything starts to just build. I mean, honestly, right now in TLT, the 20, I believe it, yeah, the 30-year bond, it's going crazy right now. People are just getting in it and the excitement starts to build and, then you start to see that parabolic going. I'm seeing the parabolic right now coming into, I was looking at the GBTC chart. And there's definitely, when you look at that chart, you can see the parabolic that's in motion right now in the shorter term. And what you need to consider if you are in these, the Bitcoin versus gold. I mean, gold, yeah, we're taking off right now. And if you look at a monthly chart, if you really stretch it out on gold, we had that period where it was almost parabolic, not really a parabolic, but we were talking before the show. Remember when getting to 1,000 for gold was just such a big deal and we just shot right up there. But eventually, you do look for that fall into a basing pattern. We never really had that with gold. It just continued higher. But we've been in a really long-term trading range now for a couple of years on gold.
Yeah, I want to bring up one chart here before we move on to gold. And this is still dealing with Bitcoin. And I think both of you can chime in, but Dave, first, I'd like to get your thoughts on this. And we talked a little bit about this before the show, but here is a chart going back the last few years with Bitcoin. You can see Bitcoin rising, falling, and now Bitcoin rising again. And if you remember the hysteria back at the end of 2017, when Bitcoin was rising like it was, anything related to Bitcoin, blockchain, this next chart here is Riot blockchain. You can see the huge move. And we were kind of joking about Long Island iced tea. They changed their name to Long Island or Long Blockchain. And this was when the stock tripled just because they changed their name. And that is the type of stuff that you look at and you say, oh my gosh, this is a bubble. This is crazy. Now, when I'm looking at what's going on here in 2019, and I don't know if you have any comments, but I'm seeing Bitcoin going up, but we're not getting the same fascination with Riot blockchain. Of course, no pop at all here in Long blockchain. So do you think this is telling us something different this time about Bitcoin?
Well, it's a really good point. It's a really good point. I think that the two charts that you're showing at the bottom, Tom, are fantastic examples. Future textbooks on bubble theories will review this as the late 2017 as an example of what happens when, a company literally just changes its name and announces a rotation from iced tea to blockchain, and the stock just spikes as a result of that. But you can see how that euphoria completely settled down, and now it's really disconnected. It's sort of beyond the point. I think at this point, when you think about Bitcoin, at the end of 2017, it was all about the euphoria. This is when Bitcoin it felt like it was going straight up, right? It was continuing higher through 10,000, through 15,000, up to 20,000. People were speculating it would go to 100,000, 1 million. There would be no stop to it. And as a result, these companies got caught up into that movement. But you don't see that necessarily now, because I don't want to say that Bitcoin or blockchain has matured, but it's definitely evolved, right? So this rally is more, people now are starting to understand a little bit about what blockchain is, and are now starting to see more of the long-term potential. So I think the motivation for this rally in blockchain and in Bitcoin and other cryptocurrencies is less a euphoric bubble sort of experience. It could be arguably more of understanding how this has long-term potential for the economy. And when you think about where to get exposure to blockchain, it's very different from something like cannabis now, right? When you think about exposure to cannabis, you have Canadian names that you can get exposure to. In the US, we're potentially getting ETFs that allow us to get exposure to those, but still very limited. Whereas in blockchain, there really isn't a great equity bet that'll give you direct exposure to blockchain. It tends to be more companies that are making blockchain or Bitcoin bets on their own. So it's things like, things that are companies that are doing blockchain projects like a Microsoft or an IBM, something like payment processors like Visa or MasterCard, or maybe, companies that are going to gain exposure based on the mining of Bitcoin, which would be something like NVIDIA or AMD. But none of those are pure bets on blockchain. It's more betting that companies like that are going to build up systems and functions and projects that are going to benefit on the long term, or going to grow on the long term upside of blockchain. So at this point, I think you're going to see less smaller individual stories that are related to the rise in blockchain. It's going to be more established players that are starting to recognize that there's long-term potential there.
Yeah, and I know we talked before the show too. I think Riot at this point, Riot Blockchain has a market cap of about $42 million. If it was such a great deal, I think you would see some of these big companies jumping in and and buying a company like Riot. They're not doing it. I think that tells us something too. Erin, before we go on to gold, did you have any comments on this chart? What do you think?
Well, I mean, I think that we still have to be careful with the volatility of Bitcoin. Yeah, I think people are starting to understand it a little bit more. But I was just looking at a chart, and since end of May, it went from a high, it traded anyway, at like 1250, and it's down, it fell to $9 in a couple of weeks. We had like over 25% drop in it. So you have to really think about it when you're looking at gold versus Bitcoin. I mean, obviously, they're just on a completely different level. You've got the youth out there, I think, that really started to grab onto the Bitcoin phenomena, whereas gold is still your father's trading vehicle sort of thing.
Yeah, I think too, your point is well taken, because if you've got funds for your child to go to college in some years, I don't think I would put it in Bitcoin. Because you might be going from Stanford to a community college.
Right.
It is worth noting, guys, that the chart of Bitcoin in any form, it's easy to not realize how extreme the volatility is. So, this chart of GBTC looks relatively normal. It's going up, it's going down. But if you think about the price movements, as you mentioned, Aaron, these are extremely volatile markets, and the daily movements, they will go 5-6% in a day, and that's a light movement day. I mean, it can go extreme from there. So I think there's a volatility at play that investors in general are unprepared for, and so it's very much uncharted territory for a lot of people.
Yeah, and right. I think that's a really good maybe segue into talking about gold, because we were talking about all the volatility associated with Bitcoin. And Aaron, we talk about gold on the show quite a bit. We don't talk much about Bitcoin, but we do talk about gold. And even though it does have its moments, you can see here on this chart that we've had a huge week, and there's certainly volatility. It is nothing like we have seen with Bitcoin over the past few years. Would you agree with that?
Well, like I said, a 25% drop from the end of May until trading right now on Bitcoin. Yeah, it's a little different. I mean, you're looking at gold as, your hedge. You're looking at it as that sort of solid, back of the portfolio type of investment, whereas Bitcoin is sort of your risk on time to, look for these big moves. Personally, that the risk, if you're managing your risk, they're obviously two completely different trading vehicles.
Yeah, and I think too, when you're looking at gold, I think the familiarity of it among investors, with Bitcoin being so new, not really knowing what you're investing in, I think everybody has a pretty good handle on what they're doing with gold. I think most people know that it's being used mostly as a hedge, but trading it, you can get in and out and not worry about these 1 week moves. I think I looked earlier and Bitcoin was down 14% in the last week, and you kind of alluded to that, Aaron. I've got a monthly chart here of gold, and when you look back over the last 3 or 4 years, we've been in about a $200 per ounce range on the price of gold, which is completely different than what we have seen in Bitcoin, which we've had a bubble, a collapse, and maybe another bubble building. Who knows? So I think your point's very well taken. But the familiarity of gold, I think, also enables more investors to feel comfortable buying and selling gold. Would you?
Sure. I mean, you actually have a correlation with the dollar, on gold. You can actually look at, you can follow the correlation, and it'll tell you whether they're really tied or not. They generally are tied in a reverse fashion. So if dollar's going up, then typically that's going to, of course, put pressure on gold. And so you're going to get that movement. Whereas with Bitcoin, as you were saying, Dave, we don't have anything really to base it on like we do with gold and the dollar. So I think that's also one of the, certainly a benefit and a big difference between gold and Bitcoin.
Yeah, and I think the appeal here of gold and Bitcoin, I think the appeal for different traders is going to be quite different. Somebody who's conservative is likely to turn to gold for, a hedge, whereas somebody who's very aggressive probably doesn't want to deal at all with the gold and the fact that it's not been moving much and so forth. Whereas Bitcoin is much sexier, like we were talking about before the show, Erin. I mean, if you want to make 50% in 3 weeks and you had to choose between these two, Bitcoin's got a chance to do that. Gold is not.
Right. I think the discussion of it kind of Bitcoin and cannabis in a way, there's a lot of, again, it's a lot of this excitement, people just jumping on board because it's new. It's not as new now. So I think we will start to see a little bit of the volatility move down a bit. But like I said, I mean, when I measured that on GBTC, that over 25% decline, I'm like, I'm glad I didn't, it's just not what I'm interested in. I don't like to play with that kind of risk.
Well, I want to get your thoughts, Erin, on the gold chart. And I know you have your DP charts that you like to use. So why don't you pull those up? But I wanted to maybe ask both of you, because we do have a poll running. And we're going to bring that up in probably about 5 or 10 minutes, which is, do you trade Bitcoin? Do you trade gold? Do you trade both? Do you trade neither? So my question to both of you right now is, do you all trade Bitcoin and gold? And or maybe even looking out further, will you consider trading if you don't already?
Right. Well, I know for me, I use the ETFs. I don't actually own physical gold, but I do trade gold, silver, precious metals ETFs now and then. But I usually do have some sort of metal like I said, in the back of the portfolio, just for times exactly like these. Gold is really taking off, but a lot of the other parts of my portfolio are just not going as strong because of the way the market is. So here's my chart of the Bitcoin, just to show you that really quick first. There's the drop. I mean, we're talking end of May from $12.50 to $9. I mean, that's right now, of course, you've got the PMO sell signal going on Bitcoin. But let me look at my gold chart, because I think that's...
While you're pulling it up, Erin, Dave, any thoughts on trading Bitcoin, gold? Do you trade them both? Neither? What?
Really good question. So I don't trade physical gold. The GLD I use in retirement accounts and have done on my own in personal accounts. And my concern was something like gold. Coming from an institutional investor background, the challenge is most institutional investors would not hold gold, only because it's hard to justify to clients why you're putting them in something super ultra conservative like that. So there's never probably going to be a huge institutional flow into gold or gold stocks, because it's just hard to justify. Now, Bitcoin, on the other hand, this is something you could argue that would potentially evolve. A place like Fidelity actually lists your Bitcoin holdings along with all your other accounts now on your website, which is sort of a vote for long-term success of that as an asset class. Having said that, I've not traded actual Bitcoin. I've not opened a Bitcoin account. I have traded the GBTC, and I was sharing, Tom and Erin, with you before we started. I've had one experience so far trading GBTC, and that was late 2017 as the market went vertical. I participated for a little bit. I sold out of it and was so scarred by that. It was a winning trade, which was good, but I was so scarred by the volatility that I experienced over that 2 to 3 week period that I was like, that was it. I think I'm good for now. So I think the challenge for something like Bitcoin is, as you guys have hinted at, until you get institutions that would participate who are, arguably more longer term investors, you're going to have that instability and insecurity of heavy volatility. And until that settles down and people feel more comfortable allocating to something like Bitcoin or other sort of cryptocurrencies, I think it's still uncharted waters for a lot of investors.
Well, I will say that as far as your scars go, I do have a trading therapist. If you need one,
I might ask you.
I don't know. I'm pretty busy right now, Tom.
Good point. All right, Erin, what are you seeing on the gold chart?
All right. Well, this is the daily chart. And, originally we were looking at a head and shoulders, which is, of course, is a bearish pattern. And when that just didn't execute over here and it just started to kind of travel a little bit, I started to notice a declining wedge. And so I started getting bullish on gold really back here. When the wedge was appearing, when we had the buy signal on the PMO. Of course, we had that pullback. We got a fake out breakout. It didn't actually happen. But now, of course, it is pretty much moving in the right direction. This, of course, is dollar gold, so we don't see any trading, obviously, today, the intraday. But you can see we went right up on overhead resistance in the period of about a week. So we're talking about Bitcoin being volatile. I guess this is a pretty impressive move right now by gold. But I also think it's important to look at a few long-term charts here. So I'm just going to pull that up real quick.
Yeah, and just a reminder.
Feel free to chime in.
Well, I was just going to say, as a reminder, for those of you maybe who are new to Market Watchers Live, Erin does a sentiment segment every Monday afternoon at the very end of the show, and talks about gold, and especially talks about the discount premium, which is a great sentiment signal for gold. So just wanted to make sure everyone was aware of that.
Yes, exactly. Another reason why I'm familiar with gold and like it. And you can see we've had very bearish sentiment because the discounts have been very high, but also you can notice that it can persist. You can have those discounts last for a while, but I think it does give you an attention flag to keep an eye out on, like the PMO. And when it starts to turn up, you can start thinking about, the bullish possibilities. But here's that long-term trading range we were talking about that we've been in for quite some time. But I'm looking at on the long-term chart, and I just happened to look at this today and see what could be an ascending triangle on the weekly chart, which would tell us to look for that breakout above that 1370 area. And I certainly think that that's possible. I have flag formation here. If you'd asked me this a couple of weeks ago, I probably wouldn't been quite as rah on it. But I think we can get that breakout now. The failure, though, to reach that resistance the last time, if we can beat out that top, I think that would be very positive as well. Okay. And then I do have the Bitcoin one for a weekly, just to get a peek at that. I think nope, that's my daily. Let me move to the weekly. There we go. And I had to put it on a log scale. I prefer not to for price movement and measuring, but you can't really see what's going on beforehand if you don't have a log chart here. But you can see that move, that parabolic move, and then the drop to where your basing pattern would be. Well, basing pattern I would have looked at more down here in that 50 cent to $1.50 range, but now it does seem that we've formed some trading ranges here. And so once this parabolic breaks down, which I'm expecting, I would look for that move down to $6.
Okay. Well, we're going to wrap up here in just 1 minute. I do want to share one chart and just, one of the reasons why maybe I'm a little bit more bullish on gold right now than I've been. Again, it's just short term. This is a chart that I like to share here on Market Watchers Live quite often. But the top part of this chart is the U.S. Treasury yield minus Germany's Treasury yield. And the direction of the difference in our Treasury yields tends to go kind of in hand with the U.S. dollar index. So as our rates are moving up faster than foreign markets, particularly Germany, that normally is going to relate to a higher U.S. dollar. And that is confirmed by this correlation, which shows a lot of times going up to +1, which is hand-in-hand positive correlation. Only rarely do we get down to a -0.5. And you can see that's only been 3 times in the last 10 years. And we're almost there again. And you can see why. We've got the yields here in the U.S. dropping more rapidly than they are in Germany, mostly because they can't drop very, very fast in Germany. But the dollar has continued moving up. And so that has resulted in a negative or inverse correlation, which history tells us is going to be resolved. The question is, are our rates going to suddenly move back up, or is the dollar going to fall? I don't believe we're just going to continue to see this inverse correlation. So if that's the fact, or if that's the case, I think that you could make a really good argument for gold. Now, the one time I saw this before, where we had this big drop in the U.S. dollar back in 2017, gold really didn't outperform the S&P 500. But remember, that was a very bullish time for the market. We were going straight up, and I think that gold was competing against other assets that, quite frankly, were just a lot stronger. And so we didn't quite see that correlation. But for the most part, if we see the dollar take a move to the downside, that normally sets up well for gold on a relative basis to the S&P 500. Now, I don't know if that's going to impact anything or not, but I will say that at least makes me more nervous about the dollar and therefore I think lends a little bit more credibility to gold's argument right now. So Dave, do you have any comments with that? And then Erin, and then we'll bring up the poll.
Absolutely. I was just, as you were talking, I think the bottom panel on your chart tells a really compelling story, which is the problem with gold is you haven't really been paid to own it relative to equities for so long, right? So even when gold has looked attractive, when it's bounced, you're still underperforming the S&P over that long term. If the thesis you just described plays out, gold all of a sudden, that line starts to turn higher, equities struggle a little bit, gold starts to outperform the S&P 500. I think that's where people will start to gravitate and recognize the fact that it is a place to be. It is a place to generate relative performance outside of a passive, equity investment. And then I think that's where you start to see a snowball effect of people starting to move assets over to gold. So that line starting to turn higher based on what you said, I think that will start to feed on itself very quickly. That's a key one to watch.
I think too. And Erin, I want your comments too. But
the technicals on the dollar, Carl and I have been looking at a very long-term rising wedge. And of course, you're supposed to expect that breakdown. And that's what I'm seeing. I am seeing a decline in gold. I would expect that wedge to finally execute. That's going to mean, good things for gold because of their correlation. And clearly, you're starting to see that with that relative chart, with gold starting to outperform. I suspect if you looked at the dollar, it's pointing the exact opposite direction.
Yeah, and I think too, one other thing I think needs to be mentioned is that gold is a hedge. So when the stock market struggles, this is where investors tend to turn. And if you look back really over the last 8 years, when I see periods of outperformance in gold, you go back to late 2015, early 2016, the S&P 500 looked like it was breaking down. A lot of folks very bearish, and so money turned to gold. You look at the fourth quarter of 2018, we had that move up in gold relative to the S&P. That coincided with a very, very difficult period for equities. And just recently with this move up, we saw the same thing with the S&P 500 getting hit in May. So I think there's a combination of both fear and the inverse correlation with the dollar. I think all of that's kind of playing in here. But I agree with you, Erin. I think if the dollar were to break down, I would be much more interested, not only in gold, but on a relative basis, I'd be more interested in energy and materials. So, sure. Yeah, we're going to move on. Here's the poll. So we wanted to get what everybody else was thinking. But Dave, while we're looking at the poll, there was a question that came in about Bitcoin. And the question is, what is Bitcoin made of? And what is it backed by? Does it have a picture of the U.S. president on it?
Well, that's the thing. So it's basically a store of value and a way to exchange value, but it's very similar to a currency, right? But instead of having a physical, bill or something you put in your pocket, it's sort of like using a debit card. And that's sort of what Bitcoin represents. It's a virtual currency. It doesn't have a physical form. And it just represents the value that people feel that it provides. And the idea that the real differentiation is Bitcoin or other cryptocurrencies like Ethereum or something like that, Litecoin, versus blockchain, which is the technology that Bitcoin and others are built on. So blockchain is basically the secure way that a whole large network of computers can agree on what something is and agree on who owns something, and that's what Bitcoin and other cryptocurrencies are representing. So the short answer is no. There's nothing physical or anything that it really is represented by, and it really is a virtual currency. It's a virtual way of having value that can be exchanged. But it's funny, as we've used credit cards and as we've used online bank accounts, we're getting closer and closer to where that doesn't seem that crazy. But many years ago, it would seem ridiculous that could be a thing. But that's where it's at.
Right.
Yeah, I agree. Go ahead, Erin. What do you think as far as this poll goes? Are you surprised?
I'm kind of surprised that there aren't more the I trade gold. I would have expected more in that area. I'm not surprised to see trading both and Bitcoin itself being a really low percentage. But yeah, I would have expected that the gold one would have been a little bit higher.
Well, I'm wondering if maybe it's the wording, trading gold as opposed to investing in gold. I wonder if we had said invest in gold might be a little bit a different investment.
I know our poll critiques are out there, and I'm sure they'll let us know in the survey.
That's all right. That was a great poll. And by the way, we're going to go ahead and wrap this up. But Dave, Erin, I think you both did great. This was awesome. And for those of you wondering out there why my picture's not up on the screen, I was told that I have a face for radio.
Yeah, I
But
had to get up
a
just a
fine
little bit
speaking
earlier.
guest.
Had to get up a little earlier, made sure my hair was brushed this time, you know.
All right. So what time did you get up, Erin?
Oh, what time? It took me, well, I only added 20 minutes.
Oh, okay.
That's all.
You look
I
great.
look great all
Yeah.
the time, but
You look great. You look great. Dave, you look great too.
I appreciate that, Tom. Always good coming from you.
all right.
Yeah, let's go ahead and move on. That was fun, though. You all did a great job. Really enjoyed having you on the show there, Dave. Appreciate it.
Cheers, you guys. Take care.
Mhm.
All right. Erin, of course, you did well as always.
Oh, well, you're just so kind.